Mounting speculation that ratings agency Standard & Poor's is poised to downgrade several Eurozone countries sends shockwaves through financial markets. Stocks and the euro tumble, while safe haven core sovereign bonds surge. This casts a shadow over what had been an upbeat week in Europe, following strong Italian and Spanish bond auctions. Looking ahead to next week, attention will centre on hopes of striking a bond swap deal on Greek debt. The EU, IMF, ECB Troika is due back in Athens for more talks on Tuesday. Greek officials say they have no immediate plans to force a deal on reluctant bondholders, but time is pressing, and without a second bailout, bond redemptions could send Greece into default on March the 20th. A well-received Spanish auction this week and a more mixed Italian offering had fuelled hopes of an improvement in sentiment in the Eurozone. But no peripheral country has yet attempted to place long-term debt this year. That will change next week when Spain sells 10-year bonds. In politics, Eurozone shuttle diplomacy also continues. The leaders of France, Germany and Italy hold a mini-summit in Rome on Friday. Earlier in the week, Nicolas Sarkozy heads to Madrid for talks with Spanish Prime Minister Mariano Rajoy. And in the UK, David Cameron hosts Italy's Mario Monti. Friday also marks the deadline for Europe's banks to tell regulators their plans in the wake of the most recent round of stress tests. Any triggering of Greek CDS could blow a further hole in the books of some banks. Oil supplies are facing disruptions on two fronts. US allies in Asia and Europe are backing Washington's drive to cut crude exports from Iran. Tehran itself is maintaining a defiant stance, saying neither sanctions nor assassinations of nuclear scientists will halt its atomic program. And oil workers in Nigeria are threatening to cut output in protest against the ending of a popular fuel subsidy. The government scrapped the scheme from the beginning of the year, more than doubling prices at the pumps. Amrita Sen of Barclays Capital says the balance of risk is shifting to the downside.
Start of the year, before the Iranian issues kicked off, we would have said that the tail risks on either side were very, very large. European debt crisis on one hand and geopolitical risks on the other hand. Europe and just generally the macroeconomy seems to be holding up. It's stable. US economy is doing much, much better. Very much geopolitics now, which is in the forefront. Iran, but that's not the only story. Nigeria and Iraq. So I think overall the upside risk to prices from here are higher.
That's all for now. Join us at noon GMT every weekday for an update on all the big market trends and movers. I'm Jamie McGeever. This is Reuters.